All right, so I'm on Chapter 3, Static Problems. So remember where you get to this is if you come over here to Brightspace and you're under Chapter 3, Resources, okay? We're going to come all the way down here to the bottom. Here is the Static Problems. That's where you're going to click to get to this. Also keep in mind that it's like you've got a couple of practice quizzes out here at the end of each chapter. So if you so far have been living on the front page of Brightspace, I keep warning you about this, but if you're living on that front page and you're just clicking on the assignments from the calendar, you're missing a lot of stuff that could help, okay? So I promise you, my goal is probably to give you way more information than you need, but if you need it, it's available to you. So I've had students come to me and say, do you have something else? It's like, I got nothing. I've deployed every possible thing that I can to get you with enough practice or whatever to get you to a good grade, okay? But look through those in those resource areas. Look through those practice questions and stuff because they're, all the practice, by the way, is set up to where every single question, just like this one that we're doing right now, every single question has the exact same numbers. So if you wanted to set up a study group, then you could even do the study group online, okay? And if you're all sitting there on the same question, you've all got the same numbers, right? So that helps a lot with the practice, okay? So y'all can work together. If you've got questions, remember, if you can't remember, my office hours are 11 to 12:45 Monday through Thursday, and Monday evening and Thursday evening from 6 to 7:30. So I'm sitting out there, we're just waiting. Okay. All right, so let's take a look at static problem number 1. All right, so remember I told you, it's like we're going to see the SPA again and again and again. So remember, Nicole has now set up her SPA. All right, so starting in May, Nicole has decided that she has everything she needs to open her doors to customers. To keep up with competition, Nicole has added gift certificates and has started to advertise her company more to keep her business going in the long term. Here is a sample of some transactions that occurred in the month of May at Nicole's Getaway Spa. Now, skip all this data. Don't waste time. This is a strategy on the exam as well. Remember, on the exam, you've got a limited time frame. And something like this, skip over every bit of that data because you don't have any context. How are we going to use this data? What do we need to do with it, and how do we need to use it? So scroll down. So in part 1, it says for each of the transactions, prepare journal entries, use the date of the transaction as the reference. Okay, easy enough. Now, one thing to note here is this. If you ever get down to these journal entry worksheets and you're sitting there and you're like, seems like something might be missing, scroll back up to the top and look at the date and the information at the top, because sometimes they've updated it up at the top, but they forgot to maybe give you all of the information down here in the input area. Okay, so don't miss that. All right, so there is part 1 of what we're going to do. Now, it doesn't stop there. So here they ask, calculate Nicole's Getaway Spa preliminary income and net profit margin for the month. Okay, so there's the next thing that we're going to do for Nicole. The next one is part 3. So which of the following best describes the adjustments that will have to be made? We'll look at that. Okay, and then there's the third part. All right, so if I want to go back to the first part, again, just a little navigation help here. Just hit the little boxes down there at the bottom, and let's just go back to part 1. All right. Now, I'm going to just scroll up here until we think that we need it. We're just going to leave it here. All right. So let's take a look at question number 1. It says, or transaction number 1. It says, record the payment of $3,000 cash for an insurance policy that covers the period from June 1 until May 31. Now, what's today's date? May 1st, okay? So, on May 1st, don't bring the future into the present, okay? What happened today? Don't worry about debits and credits. Okay, prepaid insurance went with a $3,000 debit. All right, so prepaid, oops, hang on. My P doesn't want to work on my computer these days, so just be aware that I haven't lost my mind. All right, so $3,000. Now, watch this real quick, okay? One of the things that I do not, in an exam situation, never leave anything blank. Because if you are stuck, you got prepaid insurance, but that's all you got when you're sitting there looking at it, remember, what has to happen to this journal entry? It has to balance. So basically, we just went from 50% of a correct answer to 75%, and we just went from an F to a C. Okay? So if you can only get one of the accounts, put in one account, make sure that journal entry balances. All right? And what is that second account? Cash. Good. All right. Number 2. Record the entry for the order placed for 5 new massage tables from Spa Supplies Unlimited for $250 each for future delivery. Okay, I've got 2 no journal entries and I've got a supplies expense. The majority has it. There is no journal entry here. Why? Good. It's for future delivery. So the only thing that's really happened here, and remember, we're a whole business, we are taking care of the accounting department. So over in the purchasing department, a phone call was made, maybe an email, and said, hey, we need 5 new massage tables, and the other company who's going to supply those massage tables says, okay. Nothing has happened there. So on that one, it's no journal entry. Okay? It depends, but here we're buying an asset that all that's happened is we've ordered it. Nothing has exchanged hands here. So no cash has been paid out, no chairs have been delivered, or no tables have been delivered. Okay? I thought it was saying we already paid for it. Nope. We just placed the order. Okay? That's another one of those things where it's like, a lot of times you'll read a question and you think you know the direction that's going in, but you're not really reading the actual statement. So be careful with that kind of stuff, because I will tell you, after a while, we see a lot of transactions that look pretty similar, and in one, it's written one tiny little bit different than the next one, and it is a completely different way that you handle it because of how it's expressed, but you've seen this one over here, and now you're like, oh, I know where this is going. I know exactly what I need to do. Nope. Got to read, carefully read. Okay? Record the entry for $860 worth of spa services provided to customers on account. Okay? Now, again, remember, if all you could get is the number, is there anything that we can do here to get some points? Good. Put in the debits and credits, right? So we just went from 0 to 50%. And all we knew was the number. Okay? Don't skip anything. All right? So we provided spa services to customers on account. Good. Gets the debit or credit? Debit. Okay. Okay, good. How did you know it was service revenue? Good. Service provided. So think about what just happened there. Again, try to remember that in accounting, some activity is actually happening. So if I'm your customer in this one, I walked in and I got a massage, and when I left, I said, put it on my tab. Okay? So we're just trying to take that activity and put it into the accounting records, because now I owe you $860. Okay? Now, if that was just me alone, that must have been one heck of a spa day. I'm just saying. Okay? All right, let's look at number 4. Record the receipt of spa supplies purchased for $800 on account to use at Nicole's Getaway Spa. So again, give me 800 and 800, all right? Good. Supplies and accounts payable. Which one gets the debit? Good. We bought an asset. Oh, see, my P's not working again. So we got supplies and the accounts payable. Now, let's look at one other thing. Why did I not choose supplies expense? You haven't used them yet. Good. Once you start using them, then they become an expense. How are we doing there? Okay. Number 5. Okay. Record the receipt of a bill for $60 for running an advertisement in the newspaper in May. The bill was paid in cash. Good. Cash. So cash is going down by 60. Again, if that's all you got, go with it. Okay, good. Why did you choose advertising expense rather than prepaid advertising? Good. It showed up in the paper in May. We paid for it in May. So let's just go ahead and put it in the advertising expense. Now, if that said, that whole thing, remember on the exam I said, one word can change the whole thing. If it said, record the receipt of a bill for $60 for running an advertisement in the newspaper in June, good, it becomes prepaid advertising. Do you see that? So in this case, it ran in May, we paid for it in May. Cash goes down, the expense for the advertisement goes up. If we ran that advertisement in June, that means we're paying for it before it runs in the paper and would become prepaid. You see how that's working? Okay. All right, number 6. Record the payment of 1/4 of the amount owed from May 10th. Now, notice in this one, they didn't even give you a number, right? They just said 1/4 from May 10th. Well, let's back up to May 10th. We're paying 1/4 of this, so how much are we paying? 200. All right, so let's go back to number 6, and let's give me a 200 and a 200, because I know that you can get that number. Okay, so we made the payment, so cash is going down with a credit. Good. Accounts payable is going down. So let's look back, right? This is where we bought the supplies for $800. We recorded the $800 that we owe. Now over here, we're paying down $200 of that. So now we still owe $600, right? And $600 is what's sitting out there in accounts payable, reflecting the amount that we owe. How are we doing? Okay. All right, number 7. Record the payment by customers of $1,900 cash for Nicole's Getaway Spa gift cards. No gift cards have been used. Okay. Gets a good. Good. All right, so let's talk it through. Now remember, if you're seeing a pattern here, remember all debits come before all the credits. Okay, so once we get to a point where there's more than 2 line items, sometimes we have to gap it and sort of work into it. Okay, but again, notice what's happening here. You are receiving my payment. I'm the customer. I came in, I handed you $1,900 in cash, and you handed me $1,900 worth of gift cards. And now I'm going to start passing out gift cards to all my friends for Christmas, okay? So one thing that I do want you to note here, what kind of account is deferred revenue? Good. It's a liability because we now owe the customers what? Services or product. Okay, so again, this deferred revenue, couple of things. We're not settling it in a cash payment. The cash has already happened. We're going to settle it up by providing product or services to the customer. So here's going to be the one exception about this revenue thing. So back last class, the question was asked, when you are trying to put accounts onto the income statement, what accounts are you going to put out there? And I said, if it says revenue at the end, it goes up in the revenue portion of the income statement. If it says expense at the end, it goes into the expense section of the income statement. Here's your one exception. One exception. When you've got deferred revenue. And remember, deferred means put off, right, till later. And what we're putting off is recording it on the income statement. So it's going to be, we're going to park it on the balance sheet until somebody comes in and actually uses those gift cards. Okay? Then we're going to move it out of deferred revenue into sales and service revenue because we've actually earned it at that point. No, a lot of time, well, this liability is actually going to become revenue. Assets usually become expenses. Ah!
That's tricky to wrap my head around. But they do convert.
A lot of times they do, yes ma'am. It's deferred revenue is the one exception that has the word revenue at the end, but it doesn't go on the income statement. It's on the liability side of the balance sheet because we've got a debt now that we have to settle up, but that debt is going to be settled up in providing the service, providing the product.
So when we're calculating like the net income and margin of profit percentage, then we don't use deferred revenue.
No, you do not. But if you're using something like the current ratio, where we've got current assets and current liabilities, yes. Because this is considered to be a current liability. Yes, ma'am. It goes on the liability side of the balance sheet. It's a debt that we now owe. Okay? To our customers. All right? Number 8. Record the entry for financing obtained from the bank by signing a $5,000 2-year note payable. The $5,000 cash was deposited into Nicole's Getaway Spa bank account. Good. So remember, assets go up with debits. So there is our $5,000 there. And again, if that's all you got, do not leave that blank. Good. Why do we know that it's notes payable long term? It's over a year. Now, let me go ahead and introduce something here. We're going to get into this in much more detail in a later chapter. But this note right here that we just took out, The reason why it is long-term is, and you don't realize this at this point, but the reason why it's long-term is because we're borrowing $5,000 today, and this $5,000 is due back in 24 months in a lump sum, okay? Versus any kind of monthly payments or anything like that that's going on, okay? We'll get to that part in a later chapter, but at this point, we call that a balloon payment, where we borrow today and the whole entire principal is due back at some point in the future. So that leaves it really super easy and straightforward to call it long-term or short-term. Now, what would make this short-term? If it was less than a year, good. How are we doing there? Okay. All right, number 9. Record the receipt of 2 of the massage tables ordered on May 4th and paid for the 2 tables in cash. Now, last time I made you calculate the number first, but let's go for all these verbal people first, because again, when you're attacking this kind of stuff, I try to stay away from, verbal, then switching to math, and then verbal and math and verbal and math. Let's stay with verbal or math, and then that has a tendency to leave you less tired. In this one, we're going to have to make the calculation, but let's do that second, okay? So if we paid cash, we know that cash is going to get the credit, so we're going to put this on the second line. And what did we buy? Good. Okay. So now that was May 4th. I think that was that journal? No, that was, there it is. There's our massage tables. So they were $250 each. How many did we receive? 2. So good. $500 for the debit and credit. How we doing? Okay. All right, number 10. Record the payment of $500 cash for utility bills for services received and billed in May. Okay. Now, again, something did happen. So, again, if you're just stuck, give me the numbers. Okay. Why is it utilities expense? Because we received it in May. Today's date is May 25th. All right, let's finish up that thought. So utilities expense is going to get the debit, and the credit's going to go to cash. All right? Remember, if one word changes, the answer changes. Yeah, if it said something like, record the payment of $500 cash let's see, hang on a minute. No, it would need to say something like, record the utility bills for services received and billed in May, but payable in June. So we got the bill today for May's electricity, but we don't have to pay it until June. You're close. Accounts payable. So this cash would be accounts payable, because we're telling Duke Power, it's like we came in, we flipped on the lights today, we turned on the computers, we ran the air conditioning, and we said, just put it on our tab. We'll pay you next month. You see it? So just a tiny little difference in how that transaction could work. All right? So when we get to the end of those, I highly recommend that you use Check My Works. There is no lack of pride, and I don't think less of you if you do it. Okay? Hit the Check My Work. Make sure that you've got all green check marks going down through there, and occasionally I'll have a little red one myself. okay, because my P doesn't work on my computer. So just keep that kind of thing in mind, because remember, we're working in a chronological fashion. We're writing out these journal entries in, remember, what we call the general journal. So it's just kind of as things are happening today, we're just writing everything out. But we're at this point, manually, we're not to the point of updating the account balances yet. Okay? We'll work on some of that at the end of class. Okay? So right now we're just trying to get them into the accounting system. Okay? Then, in the next one, if I remember correctly, we had to calculate that preliminary net income and the net profit margin for the month, right? Okay, so depending on how you want to do it, I'm going to come back over here to part 1. I'm going to make this as small as I can get it so we can possibly get it onto one page. I may not be able to do it. Hang on. Let's see. No, I'm not going to be able to do it. Okay, I was hoping I was going to be able to do a little snip. So again, remember, if I was on a bigger computer, I could totally do this, right? I could get that whole entire list there. I'd hit my snipping tool, right? Hit my snipping tool and just hit new. Turn that thing into some crosshairs. Make sure you grab the date. Don't miss that part. And then you pick up the picture, and then we can throw that to one side and then do a little something different with the other, right? So then we can throw that over here, and then we've got this over here, and now we can go to the next problem and sort of work with what we got. Unfortunately, that's not going to work this time, okay? All right, so remember, if we want preliminary net income, remember that what we're looking for there is preliminary net income is telling you that we've recorded cash receipts, cash disbursements, we've billed customers, and we recorded invoices from vendors. That's it. We will go the next step in Chapter 4. So don't bring anything from Chapter 4 if you start Chapter 4 before the exam. Don't bring Chapter 4 into the first exam. You're going to mess yourself up if you do. Okay? So if we need preliminary net income, what we're looking for is earned revenues and incurred expenses, okay? So I'm just going to pull up my little simple calculator here, and let's see what we've got here. Do we have any revenues or expenses right now on that page or on that screen that we need to take into account? Okay, good. We've got service revenue right here of $860. We've earned that. Okay. What else? Let's see. Let's stay on the screen. So this one, yeah, we got a little advertising expense right there. So let's subtract 60. Anything else on that screen? Okay. We scroll forward. Yeah, looks like the only other thing is utilities expense, right? Nope. Watch that. Remember, deferred revenue is sitting out there on the balance sheet, right? That's a debt that we owe to our customers. We now owe them product or services when they come in. So right now, after those 10 journal entries, our preliminary net income is $300. All right. How do we calculate net profit margin? You remember? Good. We're going to divide that net income number by revenue. Now, if you remember, our revenue number was the 860. Good. So if we just simply take the 300 divided by the 860, that's what we get. Now, how do we need to key that in? Good. Multiply by 100, or just all we're doing when we're multiplying by 100, if that throws you off, just know we're just moving the decimal 2 places. So we would get 34.88372, right? Okay. What do we need to put in over here? 34.9. Good. Okay. Now, I want to show you something. If we do 38.8, right? That would be a common error. You're looking at that and you're like 34.8, 34.8. Oh, excuse me. I put 38.8. Excuse me. How about we return to the question? Got it? Okay. And if you're sitting there and you're like, I know that answer's right. Again, remember, when you reach that point where you're just like, walk away. I give you permission. Walk away. Go do something else. Come back to it. You'll sit down and you go, oh, wait, there's the great big giant red bolded letters. It says 1 decimal place, and I didn't round up. Okay? So there's one. So once we get 34.9 in there. Also, don't do this. I've had people do this. Because they want to convert it directly. They get 0.34 over here, and it's like, oh, 1 decimal place, 0.3. Because that percentage sign right there is there, it thinks that you're telling it that it is 0.3%, not 34%. Okay, so make sure, it's little things like that, I promise, that throw you off. Okay. All right, how we doing? Other things that I think can help when you're working your problems and things is have some note-taking paper next to you and write down what you are actually using for the calculation. Because especially if you call me and you say, I can't figure out what I'm doing wrong. It's like, okay, well, what numbers did you use? I don't know. That makes it hard for me to figure out what you did wrong, okay? But easy things that you get wrong are things like that input. Make sure you're inputting it in the correct way. You know, make sure that you're paying attention to the big bolded red letters. I still keep telling them we need ants to dance around it, but I haven't gotten them to take me up on that one. Let's see. Some easy mistakes to make is you're adding rather than subtracting or subtracting rather than adding. Something like that. Okay? So if you're sitting there and you're like, I know I got this right, your logic could be 100% correct, but when you put that into your calculator, it's 100% wrong. Okay? So unfortunately, most of the time, we will, by the way, we will go over the exam. We will do a short review on the exam in class after making sure that everybody's taken it. We'll look at it, and that's one of those moments where it's like we can look at it and you can see the answers and everything else, and then you're like, oh, see, if I had my note paper there and I had written that down when I was taking the exam, I'd know exactly what I did wrong there. And again, it's easy things like adding rather than subtracting, etc. Okay? All right, number 3. Which of the following best describes the adjustments that will have to be made before the income statement is finalized? Now, this is a little bit of foreshadowing into Chapter 4, but let's go back to Part 1. All right? Look at Journal Entry 1. You remember? What was the deal with that? It was prepaid insurance, so it was an insurance policy, you remember, that covered 3 months, but it was all paid for in May. Let's see. No, I'm sorry, not 3 months. One whole year. Covers the period from June 1 till May 31. Okay? So when we get down to the end of May, what has happened with that insurance? Okay, good. So at the end of May, do we need an adjustment? No. That was a little bit of a trick question. We don't need an adjustment at the end of May. The policy hasn't started yet. Will we need an adjustment at the end of June? Yes. We will move it out of prepaid insurance and into good insurance expense. And how much will we move? There we go, 1/12 of the 3,000. So we would take 3,000, divide by 12, right? Because it's for a whole year. You see it? Oh, I'm having all kinds of light bulb moments here. Yeah. So every month from June all the way through May of next year, when we actually have insurance coverage, we will actually move $250 out at the end of each month. How we doing? We'll get in. That is basically a lot of what's going to go on in Chapter 4. Yes?
It's not because we're paying it monthly, it's split up to show what month it's being used in.
Brilliant. Yes. Well, here's the thing. In your individual insurance life, you might be paying on June 1 for June's insurance. And we would write the check and reduce cash with the credit. So on your side, it's the credit, right? We would reduce cash with the credit, and we would record insurance expense. And that's what we would do every month, every single time you made that payment. But that's only because the payment terms of the policy say that you're going to be paying monthly. Okay? In business, payment terms for insurance policies are all over the board. This one, a lot of times works with like an umbrella policy. Don't worry about not knowing what that means. But there are certain types of insurance policies where they do. The premium is so low, they're just like, just pay the whole thing all at once. And we'll just cook it off over the next year or possibly even 2 years. Okay? Depending on what the premium amount is. The bigger ones, though, really do start to get closer to the payment being made closer to the time that it's being used. Okay? Let's see. So there's that one. Let's see. Hang on a minute. Let's go back to check my work. All right. So there's the prepaid insurance. Let's see. You see anything else that might need an adjustment? Good, because we probably use some supplies at the end of May, into June, into July, right? And again, every time, just keep in mind, the accounting department, we are important people, but too many people look at us as a necessary evil. Every time somebody comes into the supply closet and grabs a pencil, we're not going to go, whoa, 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 where are you going with the pencil? We got to get a journal entry in the system for that. No. At the end of the month, we walk in and we go, we bought $1,000. It looks like we got about $700 left. Looks like we used about $300. Remember that whole guessing thing that I told y'all about that y'all don't like? We do guess. So there's supplies. So we might move it out of supplies into supplies expense. Okay. You see anything else? Good. Deferred revenue. Maybe somebody comes in and uses their gift card. Okay. I'm going to take this one step further, although we're not going to get to it till later. You see anything else? Equipment will be a yes. We'll learn that in chapter 4. Notes payable. What's going on with this notes payable every month? We're not paying anything monthly. Remember, this is a long term. This is what we call a balloon payment. So we borrowed the $5,000 today. 2 years later, we're going to pay back the $5,000. But in the meantime, interest is accruing. So we would have to record interest expense on that note. Okay? In chapter 4, again, a little bit of foreshadowing. Yes, equipment will ultimately need an adjustment, but I don't want to go too deep into that one because then y'all will start going, what? Okay? How we doing? Now notice, though, a couple of things that I want you to see here. That prepaid insurance asset, Georgia, I'm going back to you earlier. Your prepaid insurance, remember that's an asset. That prepaid insurance is going to become an insurance expense. So it goes from an asset to an expense. Okay? The supplies, that's another asset. That asset is going to become another expense, a supplies expense. See the pattern? This deferred revenue, that's a liability. It's going to become what? Revenue, earned revenue. So keep in mind, right here under deferred revenue, we don't know whether it's going to be for product or service until they actually use it. So then at the point where they use those gift cards, we know to move it out of deferred revenue into sales revenue or out of deferred revenue into service revenue. Okay? So that liability account is becoming revenue. And again, that equipment, I'm not going to go too far with it, that equipment is going to become an expense as well. This note payable, now this one doesn't follow the pattern too well because we've got to accrue interest, and that is going to be an expense. Okay? But you see how most of those, it's like they start off as assets and become expenses, and then they start off as debt, and deferred revenue becomes revenue. So there's a pattern. Okay? All right, so now that we walked through, all right, so which of the following best describes the adjustments? So record supplies used up in May. Is that one? Yes. Record income taxes on May's net income? Yes. So the answer is all of these. Because that is the one other thing that's in there. Again, we'll get into this tax thing in chapter 4. Because remember, we had $300 worth of net income, right? And Uncle Sam's going to want his part. So we've got to record some taxes in there, even if we don't pay it yet. Okay? All right, how we doing? Well, I'm trying to get you to see big picture. Okay? So don't get so down in the weeds that you can't see the big picture. Okay? All right. Let's take a look. So let's see. I'm going to skip over this one. Let's see. Hang on one second. Question 6. Whoop. All right. We got Clarissa Alba is the president of Service Pro Incorporated, a company that provides temporary employees for nonprofit companies. Now let's stop right there, because so many of you are going to blow right by that, and you're not really going to get what's really important out of that sentence. Okay? We are a temp agency. We provide workers to nonprofit organizations. You with me? So how do we earn revenue at Service Pro? Don't make it dependent upon wages. I'm going to make you be very specific about your choice of words there. Well, How do we earn revenues as a temp agency? By doing what? Selling services. So we have to send a person to that company, right? Okay. You with me? Do what? Do they what?
Do the companies pay you if you send the workers?
They do, but probably later. So let's walk through, call it a business cycle of how this is going to work. Okay? You are the temp agency. I am your one sole worker. Okay? The Red Cross needs me to help out somehow. The Red Cross calls you and says, I need a worker. You say, great, no problem. And hit the bricks. Going to Red Cross today. I'm like, got it. I show up at the Red Cross. I help them for, I don't know, a week. So we got 5 days. Okay? You, as the temp agency, are earning revenue for every day that I'm there. Because let's say that you're going to bill, let's just, for nice round numbers, you're going to bill $10 per hour for the 40 hours that I was at the Red Cross. So the week that I showed up at the Red Cross for 40 hours, you're going to bill Red Cross $400. You with me? Okay. Now, the flip side of that is that you do have to pay me as well, right? Okay. So at the same time that you're earning revenue, you're also incurring wage expense. Good. And the difference between the two is called net income. Are you with me? Okay. So now that we understand how that works, now let's step into the problem. All right, so Service Pro, that's you. Okay? You have been operating for 5 years. Stop right there. What did they just tell you? Okay, but for the accounting side of it, you've got previous retained earnings, you've got existing balances in all of your accounts and everything else. So notice that's different from every other question that we've looked at where it said, this is the first year that you're in business. We started a company. All beginning balances were 0, right? This one is telling you, nope, we've been in business for 5 years. There's all kinds of existing balances out here. Okay? Its revenues are increasing with each passing year. So, yay. Okay? You have been hired to help Clarissa in analyzing the following transactions for the first 2 weeks of April. Okay? So we've got a whole bunch of stuff here. Skip it. Required. For each of the transactions, prepare journal entries. Okay? So there's our journal entry worksheet. Okay? So let's just live down here. Let's not waste time reading up there all the data. Let's just drop down and let's try to put some journal entries together. And again, remember, who are you? You're the temp agency. You are Service Pro. Okay? Don't lose that perspective. Okay? Number 1, record the purchase and receipt of office supplies for $500 on account. There you go. Supplies. For, good, 500. Okay. Any questions there? We went over to Office Depot. We bought $500 worth of stuff and used our credit card. Brought it back to the office, threw it in the office supply closet. Number 2, record the entry for billing the local United Way office $3,000 for services provided this month. Good. How we doing there? So you sent me over to United Way to help out, and you are billing United Way. Ooh, hang on one second. Okay. Any questions there? Okay. Let's look at number 3. Record the payment of $250 for supplies purchased and recorded on account last period. Now, let me just say this. This question is a little bit more difficult than any questions that we've seen so far for one reason. You're now stepping into the middle of something that happened last month, and now you got to pick up from what happened last month and know what to do now. It would not be no journal entry. There you go. All right, so let's talk about what happened there. All right, so let's close the loop, right? Out here, you bought $500 worth of supplies, right? Now, the only thing that's happening here is now we're paying down this accounts payable. Well, accounts payable goes up with a credit, so it's got to go down with a debit, and we're decreasing the cash.
Last period, so why would the April 2nd be last period?
Well, it's going to work exactly the same way. So if we had bought this back in March, it still would have been supplies and accounts payable.
I thought you were specifically saying it was April 2nd.
Oh, yeah, no. But you see how that's working? So you had to know that this was the original journal entry that we would have recorded there, and now we're just paying down that accounts payable here. Okay? All right, number 4. Record the entry for placing an advertisement in the local paper for $400 cash. All right. Okay. So cash is going down. So let me do it this way. So look at what's going on here. Number 1, one of the accounts that most everybody can get is cash. Okay? It goes up with debits. Remember, assets are on the left, so they go up on the left, right? So this one is going to go down on the right. If you can't get the rest of it, again, you still have a C. Okay? Don't skip that. And how did we know that it was on the advertisement? It was assume that when you're looking at this, when it says placing an advertisement in the local paper, just assume that it's like it happened in the same month in which we paid for it, because the ad was placed. Okay, so it would be advertising, but we've got 2. Good, it's the expense because we actually put it in the paper. If it said that we're placing an advertisement in the local paper for next month, it would be prepaid advertising. Okay, good. All right, number 5. Record the purchase of new equipment for the office costing $2,300 cash. So again, if you're stuck, or let me just say, if that and I'm sorry because I'm with you on this one. It's like that annoying little countdown clock that's up there on that exam. If you're sitting there and it's going 3, 2, 1, you can grab a few more points there by just throwing $2,300 in there for a debit and credit. Okay. What did we buy? Equipment, and it's going to get a debit. Good. How we doing? Number 6, record the payment of employee wages of $1,200. So again, throw in the $1,200. So if we're recording the payment, cash is going down with a credit. Good. Good. Salaries and wages expense. If I just put it in, and notice what happens here. Okay. So if all you can think is wages, but you're thinking, oh, there was something else before that, you don't necessarily have to put that in there, but you can pick up WA from the wages expense. Okay. Any questions there? All right. What if that said, nah, never mind. We're not going to get that into that one's too far. Number 7, record the receipt of $1,000 on account from the local United Way office billed on April 5th. Okay, $1,000. We're receiving it, so cash is going with a debit. Good. Good. How do you know it's accounts receivable? Well, right there it says on receipt on account. What if that said record the receipt of $1,000? Hang on a minute. Let's see. Record the receipt of $1,000 from the United Way for the current week. This is a terrible example, but that's all right. What if we receive that $1,000 for this week, but we hadn't even billed them yet? Because notice don't miss this. The assumption is, notice, it says billed on April 5th, right? So April 5th was right here, right? We recorded the revenue. We recorded the billing on account. Now we're over here collecting $1,000 of that $3,000. So now we're just collecting on that accounts receivable. There's a possibility that we could have collected and earned the revenue at the same time. So there's a possibility, not in this case, but there's a possibility, instead of accounts receivable, that would have been service revenue. Good. Okay. Again, don't make this too hard. Go back to that document that I showed you earlier. In Chapter 2 Resources, right here, the accounting cycle. Because this is really all we're doing. We're collecting cash. What was it for? We're dispersing cash. What was it for? We're billing customers. What kind of revenue was it? We're recording invoices from vendors. What did we buy? Okay? Don't miss that. Okay? All right. Number 8. Record the entry for purchase of land as the site of a future office for $10,000. The land value was appraised at $11,000. We paid $2,000 down and signed a long-term note payable for the balance. Now, this is one of these annoying things about accounting. You can't forget anything from a prior chapter. So part of getting this question correct is you're going all the way back to Chapter 1, and it was called the historical cost concept. Bingo. You can completely ignore this whole entire sentence where it says that it was an appraised value of $11,000. How much did we pay for it? 10. The only thing that this sentence right here tells us is we got a pretty good deal. Maybe we are a really good negotiator. We got an $11,000 piece of land. We only had to pay $10,000 for it. In the accounting department, we care about how much we paid for it. Historical cost. Now, when you're working your way through the purchase of an asset like this, because I think this is the first time we've seen like a 3-line journal entry, start with what you bought. Okay, and what did we buy? Land. So let's start over here on the debit side and let's put in land. How much did we pay for it? Or how much did we buy it for? $10,000. Okay. Now, how did we buy it? Okay. All right, hang on a minute. Let's start right there. All right. So we had cash, down payment, good, credit to $2,000. Good. 8,000 notes payable, and is it short or long term? Good. Okay. Whoop. Hello. Let's try that one more time. Okay. The historical cost concept. That was all the way back in chapter 1. There was a whole area, and I promise you, it's a few pages where it's giving you sort of the background and theory about how accounting works, and historical cost concept was one of those items. Okay? All that means is that whatever we pay for it, that's what we're going to record it for. In this one, the appraised value, if you see something like market value, irrelevant at the point where we purchase it. Now, when that whole market value, appraised value becomes important is maybe sometime down the road, we actually sell it. And once we sell it, maybe we can sell it for the actual appraised or market value. Okay? Now, does the finance department care about the appraised value? Yes. The accounting department, not so much. Okay? How we doing? Any questions on that one? Okay. Let's look at number 9. Record the issuance of $2,000 additional shares of common stock, and we're going to get to number 11, and then we're going to take our break. All right, record the issuance of 2,000 additional shares of common stock for $40 per share in anticipation of building a new office. Okay, so good, cash, good, common stock is going to get the credit. Okay, 80,000, that's just simply the 2,000 shares times $40 per share. How we doing? You're starting to notice how it's like, wait a minute, because before they would have just told us we issued $80,000 worth of common stock, right? Now they're just doing a little something different, and they're just making you calculate the 80,000. Okay? All right, number 10. Record the entry for billing family and children's services $2,000 for services rendered this month. Oop. Good. There you go. All right, how we doing? We just invoiced family and children's services. You sent me out there, and I spent some time out there. How we doing? All right, number 11. Record the receipt of the April utility bill for $300 to be paid next month. Oop. Mm-hmm. That's another really common error, by the way. Again, when you've got multiple zeros out there, and you just kind of, your finger just gets going, and you just add an extra zero or drop one. Okay. All right. So let's look. So we just hit check my work. All right. Answer is complete and correct. Remember, if that is a little red X mark and it says Answer is correct but not complete. Remember, what does that mean? Something's blank and it wants an input in that spot. Okay? Any questions there? All right. Okay. It's 2:48. Let's be back in here at 3:03.